Well, we're back with you to take a look at our market activity, and this time around we're going to call on Brian Splitt of Allendale Incorporated in McHenry, Illinois, to talk about the market activity. And Brian, thanks for joining us. We have had a bit of a turnaround here in this grain market, namely in this corn market here for the last hour or so of trade. You know, I came in and looked at the market in the overnight hours on the Globex market, and it was maybe a quarter-cent higher or lower, either side of unchanged, but things have firmed up here a little bit this morning. Let's take a quick peek here, if you don't mind, see where we now stand on this corn market. On the December contract here, trading in Chicago, we now have a last rate of 350. So there it is again. We keep talking about this. It keeps gravitating toward that 350 mark. Had a low early in the early morning hours of 343. So now we're 7 cents off of that low, and we are now trading 5.5 cents higher than where we closed on Friday. And July, 5 higher at 379 3/4. Brian, what is going on to drive that corn market higher all of a sudden?
Well, I think you've got some pretty strong short covering in the market right now. The commitment to trade report on Friday showed that funds are short a little over 170,000 contracts of corn. And that is only about 50,000 contracts shy of their record short position. And so when you have the market very early in the day go down and come within about a half cent of the contract low, and the selling just dries up there, very quickly we saw short covering come in. And I can tell you that if they can get D's corn over 350 today, that would be an outside day higher, meaning that we took out Friday's lows to begin the session, and taking out 350 would take out Friday's highs. That would also take us above the 20-day moving average, which I would think would spur a little additional short covering at that point.
There's been a fair amount of discussion about the point that a lot of times the markets will just be in the doldrums until they reach a certain point in their harvest activity. And some folks have said that they think that happens around that 60% harvest progress, maybe 70%. How do you feel about that, and what are you looking for harvest progress number later on this afternoon?
I agree with the first sentiment that the idea of harvest pressure is generally going to dry up once you reach that 60 to 70%, and just simply because you have only a certain amount of bushels that are going to be priced as grain moves out of the field, and storage will take over from there. As far as the expectations for advancement in harvest this week, to be honest with you, I don't even put much thought into those numbers. I know we made some good progress last week when we had some good weather. Things are going to slow down this week as we see some rain move through, but we get a lot done in a short period of time nowadays with technology we have, and there's no secret about that.
That's absolutely right. Now, looking at the soybean trade, let's take a peek at our last prices. These are live from Chicago. Right now, we're 1 3/4 higher at 9.80 on that November contract. And January is up 1 3/4. We're trading at 9.91. Let's move on to the wheat trade. This has been interesting today, too. December Chicago wheat now 8.5 higher at 434.5, within about 3 ticks of our high of the day, well off our low by 11 cents. On Kansas City wheat, we have the December contract now 9 higher at 431 3/4. New crop July also 9 higher. Minneapolis spring wheat trade, we have December over there. Let's see if it's trading along as well. 7 higher at 618 1/4. And let's look at that cotton market one more time. Big surge in the cotton trade. Analysts have been telling me this is more technically inspired action today, but boy, 68.97 is the last trade there. It has been up over 69 cents there at one point today, over a 200-point increase in that December cotton trade. We'll be back talking more with Brian Splitt of Allendale about our livestock trade when we come back right after these messages. We're talking with Brian Splitt of Allendale Incorporated, and he's based in McHenry, Illinois. Brian, early this morning we had the Dow Jones Industrial Average making another new record high this morning. It was a little bit higher right out of the gate. Let's look at the dollar value and see how it now stands on the dollar index. So on the futures trade, we have December now trading 200 points higher again at 93.780. If you're wondering about that crude oil trade, we kind of flashed it up there a little bit ago, but right now on West Texas Intermediate crude oil, we are trading 26 cents higher at 52.10 per barrel. That's on December futures. That usually means heating oil or diesel fuel will go along with it. And right now, the heating oil trade is not quite keeping up. It is actually not quite about a tenth of a cent lower. It's trading at 179.8 per gallon. So basically about flat over on the diesel fuel futures today. So I wanted to get your thoughts real quickly here on the dollar value, if that is much of a concern to you today, and then we'll take a look at livestock. So what do you think about that dollar index, Brian?
The dollar index looks like it could potentially be putting in what would look like a head and shoulder bottom. Values recently have been finding resistance around 94, the low being made just below 91. So, if that pattern does validate itself, we could see a move back up towards 97, which is where this market failed in June. I don't know that I am too concerned about that as far as how it relates to grain trade. We've seen a lot of strength in the last year in periods where the dollar was going higher, and we've seen a lot of weakness in periods where the dollar was going lower. So, that day-to-day tie of weak dollar, strong commodities just hasn't had a very strong pull like it used to, years ago. But the dollar index, if it gets through 94, could have a nice run to the upside. And sometimes, the thought of the dollar having additional strength could cause importers of our product to be a little bit more aggressive buyers. That's another way of looking at it.
Well, we had a turnaround in the cattle market this morning. We had the placements number surprisingly high Friday afternoon at 113%. Cattle right on the open were sharply lower, and then it didn't take very long. They bounced off of that. December live cattle down 22 now at 116.38 after posting a low of 115 even per hundredweight. February down 40 cents. If you look at the feeder cattle trade, it was in the neighborhood of almost $3 lower there at one point, but November feeders now down $1.20 at 151.88 per hundredweight. Still back there within about 30 cents of its high of the day. January down 117 at 150.15. And on the lean hog market, as we switch over there, we have the nearby December down 80 at 64.05 after it posted a high of 65.32 for a high. So it seems like a little reversal being the norm here in the cattle and the hog markets here today.
Yeah, it does look like that. Over the last several months, we've mentioned that this December hog contract has given us some opportunity to, get hedges on for producers in the 65 zone. And generally, when it's around 65, that's been a good area to take a short stance on that market for producers. And again, we saw that this morning, and we're over $1 off of that early high. On the cattle side of things, cattle on feed Friday afternoon came in with bearish information. The on-feed number bigger than expected, and the placements much larger than expected. But we gapped lower this morning. We opened sharply lower, and the buyers were still there, willing to buy at technical support. So the December contract is where the open interest in the volume lies, and they were willing to support it above last week's lows and the 100-day moving average, and now we've seen the market turn higher on the day. So if for some reason these guys can get this market above last week's highs after a bearish cattle on feed report, that shows a lot of underlying strength there.
All righty, Brian, thanks for the comments on the markets. Good to visit with you again. Brian Splitt of Allendale Incorporated, and he is based in McHenry, Illinois. So, Christina, a bit of a bounce in the cattle market. The hogs bouncing off of their earlier highs. They're going the other way, so they're passing each other up.
Quick turnaround, right, yeah.
Yeah, kind of volatile action today in livestock.
Which gives us more reason to keep watching.
Absolutely.
Thank you so much.
That's why we're here.
Markets editor Marlon Bowling.